Morning, everybody. How are we all doing? We just check that I've got my googly eyes turned off today. I recorded the video yesterday for the new EA with the NVIDIA eye tracker on. So it means that whenever you look anywhere, your eyeballs are constantly looking at the screen. It's really weird, but I thought I'd try it out. But I've rewatched the video and it looks weird. Anyway, I think I did the live stream with it on yesterday as well. And then somebody commented on it. So I've turned it off. So I won't be looking at you constantly while I'm looking over there. Morning, Mark, even, Christian, Danny, Amy, Evil, Senji, Magnus, Baggy, Monkey, Gav, Kennelly, John, Virginia, Gregors. How are you all doing? I've got my light off today as well. Looks like the light's okay. Just check. Yeah, I've got a blurred background as well, look. Look up. Weird. It's all blurred behind me. Clever, isn't it? Modern technology. Right. Morning, Steve. Rodrigo. So we've had GDP this morning. Not a lot really happened at all, to be honest. So the pound, as you can see, has had a bit of a drop off the GDP number, but nothing really to write home about at all. New Zealand dollar's been a bit strong this morning, but yeah, nothing happened on the pound on the GDP. So I am totally focused this morning. I am. Morning Waving Post. So yeah, so GDP came out as forecast. So when you get a forecast result, obviously there's no deviation. If there's no deviation, there's no reason for the market to do anything different than what they were expecting, which is what they've already priced in. So no change. So GDP is positive, which is good for the pound because obviously the gross domestic product is how countries make money, or a measure of how they make money. And it's going well. So we're not in recession, which is good. That's about it. So nothing particularly exciting there today with the GDP figures. That's the only red news we've got today. So there is no other news today, apart from the bond auctions this evening at 5 o'clock. So we do tend to get some volatility off of bond auctions sometimes. It's a very, very hit and miss news event. If you look at the US dollar yesterday, around about the 5 o'clock mark, which is, if we've moved forward, somewhere around there, you can see that we had a bit of a volatility spike, but nothing particularly dramatic. So you do tend to get that. That was the 10 years yesterday. The 10 years yesterday. It's the 30 years today. So this is basically the government just auctioning off stuff. Give us some money, please, type thing. So sometimes they do have an impact. If the bonds go for a lot more at auction than anticipated, there is quite often a big spike and a big move for a few hours. But that's all we got today. So there's no other news. Obviously, yesterday we had the CPI figures. Positive for the US. It means they're not really going to do much with it. So all we got yesterday was a spike on the US dollar. So US dollar had a big old whipsaw, bit of a push up, back down, return to origin. As I said yesterday in the live room, I wouldn't be surprised to see us back down where we started in a couple of hours. And that's exactly what happened, because there's no real reason for the US dollar to power up. Although these are good inflation figures, meaning that interest rates will tend to be put up with inflation. We know we're at the high point of interest rates, and there is no massive move on inflation. It was a 0.1 deviation, which is absolutely microscopic. So it's basically neutral rather than bullish or bearish. So I put an analysis in the Discord channel about it, but so yeah, no movement on the US yesterday either. So today's going to be just normal Forex movement. Anything that the market needs to do to execute orders and drive the market in any direction, it will do. But the next news we've got is 12:30 tomorrow afternoon, which is your PPI figures, which is the producer price index, which is like the consumer price index. It's basically kind of the wholesale, if you like, inflation figures. We've also got retail sales coming out at the same time tomorrow, along with unemployment claims. So tomorrow is quite a big one for the US dollar. There's 3 core news releases that are going to affect potentially the US. So we could have quite a volatile, turbulent afternoon tomorrow afternoon. So I'll be back on at 12:15 tomorrow afternoon to trade through that. So we'll have a look at overnight stuff. There was not a lot I saw overnight. If we look through, going back to Bailey speaking yesterday and saying pretty much nothing. All we got really was something out of the Japanese last night. Auto workers secure a pay gain. Workers secure biggest pay rise in 3 decades. So basically, they're just up in there. They're getting ready for the interest rate rise, basically. But that was about it. And GDP, obviously, that we had this morning. So nothing particularly exciting at all. We just had Vilroy talking. Citibank expects Bank of England to start cutting rates in June. So again, same thing. Everybody's going to move in June. Basically, this is the way it always works. The US moves, everybody else moves. The US is moving in June, everybody else is moving in June, basically. So June is where it's all going to kick off. So May is where it's going to start to get volatile. ECB more likely to cut rates in June than April. Same stuff, basically. So we know that that's happening. So we've got a couple of months of silence and sideways movement ahead of us. So I'll quickly go through the ADRs and RSIs. What's going on with the markets this morning? FTSE not really going anywhere. DAX not really going anywhere. Got short trade on the DAX. Nothing much particularly going on there at all. Boring. So yesterday banked 2%. We had a lot of good movement yesterday. H1M5 mean reversion banked 2%. I'll quickly go through what was banked first, and then we'll have a look at the dashboards. So US dollar CAD yesterday, out of that one. So that was an H1M5 mean reversion entry. First entry there, second entry and out in the propulsion gap. Euro US dollar banked yesterday. That I think was that was a complete trade as well. So first entry, H1M5, out. Euro pound, that was a single bank. So this euro pound, I just banked one position ahead of the news, just in case we had a lot of volatility off the news that went the wrong way. This one is one that I've been in for absolutely ages. I keep banking on it. Just can't get out of it because it's just stuck. It's been stuck for weeks, totally weeks, sideways. I'm just looking for a break to get out, but I can't. So I just keep banking it. If it pushes down, I will add it on again. And if it pushes up, I'll bank it again. And I'll just keep doing that and taking money out of the market until it decides it wants to stop. Quite a lot of stuff banked yesterday. Aussie US, that was a single yesterday. So I banked that one there. Again, a lot of these were just banked ahead of the news. That was the wrong thing to do because that would have dropped down and got me out nicely, but still got 2 positions on that, targeting propulsion gap to the downside. Aussie dollar Swiss, I think that was a complete closeout. Yeah. So that was 2 positions, first entry, second entry, out. And pound Swiss finally got out of the pound Swiss. Actually, no, the pound Swiss on this one was actually really easy. The pound Swiss on the other one, on the ADR reversals account, was the hard one. So 3 entries, first, second, third, out. So that was the H1M5 mean reversion entry. And then I was targeting propulsion. I got out just before because the news was coming. So decent month so far. H1M5 banked 8.6% so far. We're only halfway through the month, so plenty of time. Looking like it might be a decent month. Sitting in 3% of drawdown. ADR reversals banked 7% or 6.7% on that yesterday, 4.26% the day before. Banking heavily on this at the moment on this account, mainly because I'm stuck in the Euro Swiss and the Pound Swiss. And it's funny how this goes. The more drawdown you get into and the more squeezes you're in, the more money you make. Because what you're doing as you're getting squeezed, as you can see this one, I've been working this since February. In and out all the time, constantly. The more you get into drawdown, the higher your lot sizing is. The faster those moves come, the more money you make, because you've got a very high lot size on, which banks a lot of money very, very quickly. So squeezes, although they're awkward to deal with and hard work, they are actually what pays you the most money when you get them. When it's all going nicely and sideways, you will just bank regularly and you won't bank huge amounts. You just continuously make money. When it's squeezing against you, you get an opportunity to make an absolute fortune, which is great, which is what I've done this month. So got out of all the Swissies yesterday halfway too soon, but it was pushing down. I had an opportunity to bank just over 2.5%, so I did. So out of that one yesterday, Euro Swiss, I got out of one yesterday. That was ahead of the news. And then I did some drawdown control on the Euro Swiss, as you can see, using the pound Swiss profits. Get off, pen. So these were old positions on the Euro Swiss, one there and one there. So that was taken off completely, and I took 50% of that one off. Just drawdown control, just reducing that exposure on the Euro Swiss, getting the lot size down because it's getting a bit squeezed, or has been squeezed for a while. But banked quite a few other bits and pieces on this account yesterday. Pretty much the same as you just saw on H1M5, because the H1M5 and the ADR reversal entries are very similar. So Aussie Swiss, Aussie US got out of one of those ahead of the news, or on the news actually, on that particular case. US dollar CAD exited all of that. So that was this was a interesting one because it was actually a hedge. Got hedged on it because it was an ADR hit to the downside. We continued to push, second entry, third entry. Market then pushed up, didn't get out of the positions long, so actually took a short because obviously it was an ADR hit to the upside, so put a short position on. And then we pushed up yesterday. So out of that propulsion gap, I closed all the longs and the short at the same time and banked $200. So good example of multi-direction exits, which the EA does. Is obviously settings in the EA to do multi-direction basket trading. So regardless of whether it's a long or a short, if the total profit reaches a certain amount, close the whole lot down, which I did. CAD Swiss, New Zealand, US. There was just so much banked yesterday. It was, just loads of movement. And that's basically how we make money. When the market moves, we clear up. And yesterday, the market moved. CAD Swiss, again, there you can see there was an entry there taken and off, did a bit of DD control. Same thing yesterday, that pushed down, did a bit of DD control. Just keeping on top of the drawdown, basically. But it's all going sideways. So it's all we're doing at the moment, just constantly banking individual trades, it seems, because we can't actually get any strong enough movement to bank complete positions. So yeah, 21.7% up there, 10% to drawdown. Over half that pretty much half that drawdown is this Euro Swiss, which is stuck. Aussie dollar Swiss as well. The Swiss francs, I just want a day of Swissy. Just buy the Swiss for the day. Phone the Swiss bank and just say, we buy you for a day? And then just boom, out of everything. Just need the Swissy to rally. Hedging banked 7.25% yesterday. Again, loads and loads of movement. So we sit in drawdown for ages, waiting for the market to move. The market moves, we get payday. Yesterday was another payday, 7.25, 31% banked on the month, sitting in 33% drawdown on the equity on the account. Again, same sort of stuff. Pound Swiss, Euro Swiss, those are the main protagonists at the moment. So once I said yesterday in the live room, once I've doubled this account, which is not far off now, I'm 3K away from doubling the account. So when the account's doubled, which I started in January, I will then turn the EA off and start to just get flat basically on the account. I don't really want to trade it like this. I want to use automated drawdown control because I'm finding it too hard to manage this account. There's too much needs to be done on a regular basis on this, like adjusting targets and everything. So I'm going to turn this into a full auto account using the EA, which means it won't make as much profit. Well, it might do actually, because I'm still going to do manual targeting. I'm just not going to do drawdown control manually, because so what it'll do is it will hemorrhage cash a little bit quicker. So it probably won't make as much money as fast, but obviously it won't be any hassle. So yeah, so there you go. That was yesterday. Lots banked. No trade at the moment on the FTSE. Oh yeah, no, sorry, I'm long. Just gone long on the FTSE. Short on the DAX. Just it's not moving though, really, at the moment. Dead as a door now so far. Big day yesterday on the DAX. We put an all-time high again. So really, and the FTSE as well, big rally. So good strong market at the minute. We're obviously expecting all of the FX pairs to drop in price, all currencies to start to devalue when interest rates come down. So obviously what the market will do is it will pull money out and put it into the stock market. So we tend to get stock market rallies when we get reduction in currency value. So it's it's basically doing what it says on the tin, rallying as usual, but it's doing it ahead of time. We would expect this move to start probably May, but we're off now. So it seems, so we're continuously making new highs on most of the indices at the moment. So all bull. We're back in a bull market, I think. We'll wait and see. Right, RSIs and ADRs. Very easy today. There are no ADRs, nothing to look at because the market hasn't moved anywhere so far today. We are just sitting pretty much inside bar on yesterday on everything. Yeah, so yesterday there's your high and your low on the news. We're inside bar on yesterday at the moment, so nothing's moved yet. No ADR hits. We're on Wednesday. Nothing's hit its weekly ranges yet either, so we haven't had any big strong moves this week that have driven the market far enough. We've had no monthly hits either, so the market is very quiet so far this month, especially this week. Very, very, very quiet, as you can see. Monday, Tuesday, Wednesday. Yeah, we ain't going anywhere. So nothing's happening this week at the moment. I was expecting a little bit more volatility off of CPI yesterday, but obviously we got pretty much as expected results. So if you're going to get as expected results, you're going to get no movement. So market moves on volatility and unexpected news results. There wasn't any, so we haven't gone anywhere. So there's no ADRs to look at today. There's no weekly ranges to look at today. There's no RSI extensions on the 4-hour. There's no RSI extensions on the hourly. The market is just flat and dead. So nothing happening at the moment. We are starting to get some movement on the pound by the looks of things. So yeah, a little bit of movement starting on the pound at the moment. But if we just whiz through everything, just see if anything else is moving, basically. Not moving at all, is there? Look. New Zealand dollar seems to be the main mover so far today during the Asian session. So we've had a good rally on the New Zealand dollar. Swiss franc looks like it's weakening. Yeah, so we got more weakness on the Swissy again today. Come on, Swissy. I just want you to stop being weak for 5 minutes so I can get out. No movement on the yens. Yeah, Swiss franc is the main mover today. Weakness in the Swiss franc. Apart from that, there's just nothing moving. So nothing to look at today at all. So if there's any pairs you want to look at, let me know and I will have a look at those. Morning, Mustafa. Morning, Evans. Morning, Yoko. Michael. When will you start looking to control your drawdown on a pair? Do you have any rules? No. So there's a few videos on the website about drawdown control. So there's three main videos to do with drawdown control. Aggressive drawdown control, turn any losing trade profitable with aggressive drawdown control, and how to survive a squeeze. So those three videos cover pretty much everything you need to know about drawdown control. So, but I don't really have any rules. So, my kind of initial alarm bell is 3%. So if an individual currency gets into 3%, that's when I tend to start thinking, I need to start looking at this because it's just not pulling back. Nothing's moving, basically. So if you look at the Euro Swiss, let's look at the ADR reversal account. So the Euro Swiss is sitting in 5%. So if you look at where I started doing drawdown control on this one, yeah, so those were the initial entries. Drawdown control was done there. Yeah. So there's two things I look at for drawdown control. I've just recorded the video for the new EA yesterday, and in there I've talked about drawdown control because the new EA has got automated drawdown control built into it. So we've got this automated drawdown control, and we've got aggressive drawdown control. So I've said in the video, I'm not going to be using this aggressive drawdown control function, and I wouldn't recommend you do either, because the time you enact aggressive drawdown control is when you are really uncomfortable. Because I've got something here sitting in 5% of drawdown. If I didn't have 20% banked this month, I would be incredibly uncomfortable with that. If my drawdown here was sitting at 20%, I would be incredibly uncomfortable with that. But I've banked 20% this month. I'm in 10% of drawdown on the account, and that is the only thing that is causing me a problem. Everything else is absolutely fine. So yes, that makes up 0.5% of my drawdown, but in the grand scheme of things, what is the problem? There's $2.5 grand of drawdown there. I've banked $6.5 grand this month. What I could do right now is just shut that and go, screw you, I'm off. Not interested. All I'm doing is knocking $2.5 grand off of my P&L, which makes me only $4 grand up this month. If that P&L was sitting at 2,500, I would be a lot more concerned. So this is the thing that's really difficult to explain in any course or any video about aggressive drawdown control and drawdown control. It's a comfort thing. It's something that you individually will feel, I need to do something about this. So if something is screaming like this, and let's say it's gone parabolic, it's just gone like that, right? And I'm sitting in, say, 6% of drawdown there, I won't necessarily want to do aggressive drawdown, normal drawdown control on that. Because if that thing's gone parabolic for ADR in a period of like a week or something, there is no way it's going to continue to do that, because the market won't be able to sustain it. There won't be anybody left selling to buy from. So the buyers will have absolutely no choice but to go, right, we can't go any further. And what you'll find is you'll get a big spike, and then you'll get a shooting star going, which is basically the buyers' exhaustion and the sellers basically saying, we're not interested. So the buyers are going, we haven't got anybody else. And they will take profit on it. That's when I'll do aggressive drawdown control. When I see that exhaustion starting to happen, it may not work. The stop loss might get done and I might get stopped out on it. But it's not because of a percentage number. It's because of what I see on the chart. And it's because of where my portfolio is. It's because of how much I've banked this month. It's because of what I did last month. If I had a crap month last month, I'd be wanting to get out of this quick. If I had an amazing month and banked 25% last month, I couldn't give a monkeys. Yeah. So it's not something you can really automate, and it's not something you can teach, because it's a feeling, and you only know it when you know it. So what happens virtually all the time? I'm just trying to find pound Swiss has got failed aggressive drawdown control on it. Yeah. So what happens virtually all the time? This is a perfect example. Look, this is where I started to do aggressive drawdown control at that point. So we had pushed 242 pips. ADR is 50. I'll read it. 55. So we pushed 5 ADR against the initial position. Yeah. So I did a little bit of DD control there, actually. But that's where I started to do it properly, because we just squeezed for 2 weeks. So I thought, right, this has got to come down now. We haven't had any real big pullback. So I started to do aggressive drawdown control. That one worked out. I did a bit of DD control there, banked a little bit of cash. This one here didn't work out. This one didn't work out. Look at that spread, took me out. That one did. So I did some drawdown control. That one didn't. Yeah. What always happens is you will do a drawdown control, it will fail. You will do a drawdown control, aggressive drawdown control, it will fail. The next time you do aggressive drawdown control and it fails, that's usually it. And at that point, I will get really aggressive, because if I've got to a point where the market has pushed so far, every drawdown control attempt is failing, or I'm getting a break even on it or whatever, you get to a point where you just think it's got to turn the opposite direction. And it invariably does. And what usually happens is you will have one drawdown control which will make you a fairly big loss, and you'll be like, right, this is it. And you'll take a more aggressive drawdown control, and that one just works. Because by the time you are looking at doing aggressive drawdown control on your account, it's been weeks, or it's squeezed so far, and you will have seen it play out over and over again. And you'll just go, this has got to be it. One of them will be. And it only takes one of them to work to get you out of that position. You will take losses along the way, but one of them will work. And when it works, you will just get out of the whole thing, like I did on that one yesterday. It's just because it's gone so far. Yeah, the market can't sustain it. When it pushes, it's got to pull. It has to do this because there's no one else left. There is only a certain amount of orders commercially that banks have that they can place. There's a limited amount of money that they can use for commercial orders before they have to get out of those trades, because there's no more reason to do it. If HSBC have got like millions and millions of orders to convert the pound into the Swiss on their desk, they will execute those orders. When they run out, they won't. Yeah. So if they are going, yes, we need loads of short, load of short, load of short, load of short, and everybody else is going, brilliant, HSBC are buying all my orders. At some point, they'll go, we've done them all. Okay, right, what's next? These guys can't do anything now because all that liquidity's gone. So they go, all right, well, let's get out of this move then. Let's take the money. And this is what the profit take move is. So it has to exhaust. Just because economics don't allow it to do anything different. And those are the points when you know it's going to happen. But there isn't a set time, there isn't a set distance, there isn't a set percentage. It's just something that happens, and it's very difficult to explain. But it does. So I don't really have an accurate answer for an amount. It's just, and you know, again, I've done this in here before. I did this one I remember really well is oil last year. I started trading oil last year and it was going absolutely fantastic. We got into a squeeze and I took about a 9% loss. I was like, oil, I don't know the instrument because I don't trade it regularly. It was going really well. And all of a sudden it got into 9% drawdown. And I was like, I'm worried about this breaking a new low, because oil, if it dropped below the level we were at, was going to collapse. So I took a 9% loss on it. And I was like, I can guarantee you in 48 hours, this thing will be up 3 ADR. And it always, if I was to close this now, this Euro Swiss right now, and go, right, screw it, let's take this 2.5 grand, just be out of it and be comfortable, I guarantee you Euro Swiss would collapse the next day. Because the point that you get to where you go, I can't handle this anymore, is where the squeeze is. This is why it's called a squeeze. The banks are squeezing you until you're uncomfortable and you go, no, I can't do it anymore. And then they will revert that order. It's just always the way. It's an unexplainable thing in trading, the squeeze, and when a squeeze ends. And it's always at the point where you can't do it anymore. Don't forget, we're doing the same thing as the banks. We're riding the waves of the banks. We know what they do, why they do it, how they do it. So we know when they're about to do something. It's just you've got to hold on long enough to allow that move to play out. And you will always get to a point where you think, I can't do this anymore because it's too far. And that is always the point they do it. I've said it in here. I've had this conversation many times in here because I get asked it all the time. There isn't an answer. It's just one of those things you've got to experience. It's trading. You can't, everything you learn on paper, everything you read in a book is brilliant. You can become extremely knowledgeable. Doing it is a totally different thing. You will experience it at some point. And what you will do is you will take a loss on your account of X%, and then 2 days later it will be down and you'll be like, You'll do that twice and you'll suddenly go, he's right. And there's no reason for it. It just happens. But you've got to experience it. You've got to take those losses. Part of your education as a trader is blowing accounts and taking big losses. Because if you don't have those experiences, you won't know what not to do next time. The only way you learn is by having mistakes happen and things going wrong. Because when it's all going right, you're not learning anything. When I'm constantly banking money, I'm not learning anything. Nothing. It's just everything's happening. Everything's great. Everything you said in the course is all happening. It's brilliant. It's only the squeezes that we learn from. And it's only the big drawdowns that we learn from. And after a while, you realize that every time you've got into trouble and you've blown something is because your positions are too close together. Your risk on the initial position is too big. Your lot multiplier is too high. Yeah. Something that you shouldn't be doing is happening, which is causing it. And if it isn't one of those things, it's just nothing you can do about. So you just have to take the loss. Yeah. If the Euro Swiss wants to carry on going, I am going to have to take a loss on it. And it might blow my month. I don't know. But it's one of those things that happens every now and again. People have problems accepting loss. Yeah, they think that position trading is the answer to never losing. It's not. I lose all the time. I take drawdown control all the time. I do aggressive drawdown control, which fails all the time. I have negative months. Yeah, you can't not lose in the market. You can't control something that moves up and down at random. Therefore, you can't control when you are going to make money or lose money. You have to take losses. And if that thing gets up to 10% in the next couple of days, I shall be taking a 4 or 5 grand hit. Can't do anything about it. Hopefully it doesn't. But I have no control over that. The banks and institutions will decide my fate. It's just, I could cut half of it now and reduce that risk down, but I've got no reason to at the moment. It's pushing up in this hour. It did that for 4 hours yesterday, did it for 5 or 6 hours the day before, and it did that before. It had a whacking great candle there. Every time it's pushed up, what's it done? Dropped. Now, if it pushes up, breaks above that high, and sits up there like that, I'll be more worried. So I might put some stops on some positions to take 1,500, 2 grand's worth of loss. I might not. I don't know. I have to wait and see what happens on a day-by-day basis, because this is your job, analysing what the market's doing. And all you've got to do is say, all right, the market's going against me. What do I want to do? Do I want to get in again? Have I got faith or not? Anyway, there you go. What do you think about GJ? Was in a short thing about getting out now. What do I think about GJ? Was in a short thing about getting out about now. Don't understand the question, but yes, you should be short. Not really gone anywhere, is it, this week? So we're holding this low, which we rejected yesterday. We're coming up to retest that. So potentially, I mean, the yens, we're looking for all these yens, you know, we're looking for that, aren't we? Because they're increasing their interest rates. So market structure has certainly shifted south. So we've got high, low, lower high, lower low. Could come up for a lower high. Could just accumulate and break. Don't know, but certainly want to be short on it. Yeah. Where it's going, don't know. So there's propulsion gaps to the upside and downside on this. So, you know, this is your initial target, closest target. This whole area here basically is one propulsion move, which is the break that broke that level. That's where it started. So this is where the initial orders were put in. So it's 150 ADR to the downside is a nice, easy target. We've got that propulsion gap there, which they started the bull move on, and then they added to it twice, pushed away. So we know there's a lot of orders there. So those two areas are areas I'd target to the downside. If it's pushing up, looking for a retracement on that. So either in here somewhere and then leg down. But if the Japanese come out and say, oh, I'm not actually sure we're going to do the interest rates, we're going to go sideways for a month or two. So, you know, everything is driven by fundamentals. At the moment, the pound are going to reduce their interest rates in June. The Japanese are going to increase their interest rates potentially next month. Both of those are down arrows for pound yen. When is it going to move? I don't know. But I'm short bias. So my EA is set up on the VPS to go short only on everything against the yen. So XXX, JPY, I am not going long. I'm short only. So if we come up to ADR, I'll short it. If we get an RSI extension, I'll short it. But I'm not going long. Because the fundamentals at the moment on the yen, this is the first time in 6 or 7 years, in 7 years, we've had an interest rate rise on the Japanese yen. It's going to do nothing but power up. Admittedly, it's going from negative 0.1 to 0, which compared to the rest of the world, obviously is awful. But it is going in the right direction. So in a long squeeze, you have to do aggressive drawdown control because you can remain in the position so long the swap can kill you. And you don't know how long it can take to get back to your entry position. Well, it's not a long squeeze. A squeeze can be in both directions. Swap can't kill you. Swap is just a cost of doing business. It makes your life a lot harder the longer you hold it, but at the end of the day, it's a cost of doing business. You can't avoid it. If you want to avoid it and not pay swaps, then just trade in one direction. Simple as that. So if you do not want to pay swap fees on yen pairs at the moment, long it only. Good luck. But long it only. It'll work. It will go up before it comes down. And you won't pay swaps. But I can tell you now, if you go long on the yen against the yen, you will be making lots of money in positive swaps because it's going to squeeze the crap out of you at some point, and you're going to be in it for months. But you will make positive swaps on it while you're in 5, 10, 15, 20% of drawdown on your account. Forget about it. People concentrate far too much on commission, spread, and swaps. Those three things you have no control out of. If you want to be in this job, they are your cost of doing business. If you open a shop, you have to pay for electricity, you have to pay rates, you have to pay rent. If you want to be a trader, you have to pay swap, you have to pay commission, you have to pay spreads. If you want to drive a taxi, you have to pay car tax, you have to pay insurance, and you have to pay petrol. Yeah. You cannot avoid a cost of business. This is a cost of business. Forget about it. Deal with it. If you don't want to trade the yen because the swaps are too high, remove the yen from your portfolio. Not a problem. Then you won't have swaps on the yen. But that means you can't also trade the euro pound or anything else with a positive swap. More than half of the stuff has a negative swap. But there's nothing you can do. If you get squeezed, yeah. So if I get squeezed on something, let's say, let's look at this one here on the pound yen, right? So I got in there, and there, right? That exit was profitable. My average price was probably there, but I had to get all the way down to there to make money because that is the amount of swap I got charged. Let's look at it. Pound yen. So let's look at some of these swaps. $7, $22, $107, $132, $117, $43, $34, $56, $49. Yeah. So if you remove all of that money, my exit could have been there, but it wasn't. I can't control it. I can't do anything about it. So it is just what it is. If you get squeezed on something that you have to pay swaps on, it's going to be harder to get out of. But, you know, this is why I keep going back to the video about control all the time. You can't control it, so forget about it. Yeah, it's when you try and control something that's out of your control, like the pound yen right now is going up. Yeah, if I want it to go down, I can't do anything about it. So forget about it. You don't have to worry about it. If price goes up to ADR today and I'm short, I can't do anything about it. Forget about it. It's just one of those things that you just have to forget. You know, people in the past, when I've been doing trading courses, I did a trading course with some guy, I can't remember, so many courses, but he was trying to get everybody on his course to sign up to this one broker, probably because he was earning a load of commission on it, I would imagine. But the reason for it was the spread on this broker was half of most other brokers. And he was going on about how much he did all this mathematical calculation on if you'd have traded with a spread there on all of these trades, your profit would have been X. If you'd have traded all of these trades with your spread there, your profit would have been Y. You'd have made an extra $1,500 a year. And I was like, oh, that's really good. I was really into it at the time. When you think about it, all you had to do was wait for price to move down an extra 2 pips to get out of your trade. So instead of going with a broker that has half the spread, just wait for price to move a couple of pips more, because it will. So why bother mucking about with, oh, I've got to use that broker because the spread's tighter? No, just wait for price to move a bit more. You're going to get exactly the same result. It's all pointless because you can't control it. So you just get on with it. Morning, Chucks. Can you explain how you have the EA on all 28 pairs but only have 3 tabs open when flicking through each pair? So the VPS basically, all my EAs are running on VPS. So EAs aren't running on any of these terminals you're looking at. This is my VPS. So that's the H1M5 mean reversion account. That is the ADR reversal account. That is the H1 hedging account. Yeah, all 28 pairs open with the EA running on it. Yeah. This account, these 3 terminals here are on my local machine. The VPS is sitting next to me over here. So the EA doesn't run on here. The EA doesn't run on this machine at all. The EA is running on my VPS. EA's got to be on 24/7, 365, monitoring the market. I'll do a video on it at some point. It's one of those ones on my list there's a lot of stuff that I take for granted that I realize people don't take for granted. Because obviously you've got to learn things. I always say there's no stupid questions unless you ask a question twice. What I forget is that people haven't asked the question the first time. It sounds obvious, but why would you know? Exactly. But yeah, so I'm going to do a video on setting the VPS up with the new EA as well, because obviously the new EA works in a slightly different way to the market reverse alerts EA and the SIH EA and all the other ones. So I'm going to do a video on setting it up, basically. AZ just joining. Have we already been through the new EA update section of the stream? Nope. I can't type. Oh my God. I can't type at the moment. There it is. There's the video. Sneak preview. It's 1 hour long. It's live. But it's not, it's hidden. But yeah, no, it's done. I'll be launching it today. So the video's done. It's on the marketplace. The manual's done. You just can't access any of it yet. So, yeah. I haven't got any set files done. This is the thing. I'm just struggling to get set files together. Not from a view of having to find different ones for different things, which is what I want to do. I want to find a high risk one. I want to find a nice easy one. I want to find one that uses DD. I want to find one that, but the trouble is I've got 35,000 set files that are all profitable and I can't pick one. I don't know what to do with it. I'm every time I push the publish, I've hovered over the publish button about 5 times in the last 24 hours. And then I go, I haven't got any set files for it. And I just know I'm going to get bombarded with people wanting set files. So what I've decided to do is, this is the release version. It's going to use 0.25 risk with a 1.1 lot multiplier. I think at the moment, I've just want to do more testing this morning. ADR, half an ADR between trades, 0.5% target on 1% target. And it's going to use 80-20 hourly RSI and 125 ADR extensions. Because that is a good all-round, you probably won't go far wrong set file that works virtually on every FX pair, but obviously won't survive COVID and things like that, because nothing will. But it seems very stable across everything. With drawdown control on, it doesn't make as much money, and it goes into about 50% less drawdown. So I don't know whether or not to put that to true or false by default. I know, and probably most people in here know, that it's better to have it on true, but what people are going to want to see is a load of money. So no one's going to be interested in something that only makes 60 to 80% return on their account in 4 years because they're stupid and they want a Lamborghini. But that is what this does, which for me is brilliant because it pays the mortgage and I don't have to touch anything. So I'm just struggling with getting set files together. The problem I've got is I'm absolutely overwhelmed with results now because of the speed of testing on this thing. I've got system parameter permutation tests coming out of my backside that are profitable. Yeah. So all of these system parameter permutation tests, of which there are 24, 31. So there's 31 tests I've run. Virtually every single one of these has 100% hit rate, all profitable. Yeah, there's the odd one, which this one only passed 868 of 1,000. So there was about 160 variations of this particular setting that didn't make profit. But this one, there's 845 there, 989 system parameter permutation tests out of 1,024 made profit. Return on drawdown of 5.5, return of drawdown of 8. You know, it just makes money. Everything I do with it makes money. So my problem is 31,000 system parameter permutation tests here, i.e. 31,000 set files. Which one do I launch it with? Which one do I put out for people to say, if you want to do this, use that? I haven't got a clue where to start with putting out a set file because it all works. But I do want to put out something that is safe. So the drawdown, this column here, will vary dramatically. You know, we're going up to 11%, 15%, 18%, 23%. So I don't really want to launch it with something that does 25% drawdown. I'd rather launch it with something that does 3% drawdown. But the difference in profit is going to be 50% less profitable. But this is the thing, isn't it? You never know what people want. If people want the Lamborghini, they're going to look at this and go, it's a load of crap. If people want safe and stable, they're going to look at this and go, wow, that's amazing. But I need to do a video again on backtesting in detail to show how system parameter permutation testing works, what it's showing you, what it's telling you, how you can create your own set files to do what you want it to do. If you want to be an absolute lunatic and buy a holiday in the next 4 weeks, you can do it. But there's a 60% chance it will blow your account. There's a 40% chance you go on holiday. People, there's nothing wrong with that. If you want to pass a prop firm, that's how you do it. And it will do it. But there's so many set files I can put out. All of these set files on RSI and ADR, they're all profitable. 1,000 out of 1,024 profitable. ADR set files, 950 out of 1,000, 996 out of 1,000, 997 out of 1,000, 124 out of 124 profitable, 100%. Doesn't matter which of these settings you use, every single one of them generated alpha. How do you pick? So this is where I'm struggling at the moment. Is just what do I do with it? What do I set it at? So and I want to put out a big portfolio test and all sorts of other stuff, but it's just time. I haven't got the time. I need another week of testing, really, but I can't. I still don't think I'm going to come to any conclusions. So apart from just get in and do it, which is what I say all the time, isn't it? I say, just take a trade, flip a coin, take a trade. Doesn't matter. This EA will get you a profitable result, whether you flip a coin. It doesn't matter what you use. I just want to use something that's safe initially, and then people can get riskier if they want to. So, but anyway, I'm piling on some Swiss pairs on a swing trade because interest rates are close to reversing, and I'm getting positive swap. Good for you. Don't blame me if it goes the other way, though. If you're piling in, I don't like the sound of piling in. Piling in just before it goes the opposite direction is a blown account. MT5 version? No, not at the moment. Because I use MT5 and it's crap. I will build it for MT5. I will test it for MT5. If it gives me any kind of problems whatsoever that take me more than 2 hours to fix, I'm not releasing it for MT5 because it's shit. Use MT4. Why not run the same set files as the ones you're running on RSI and ADR right now? Yeah, I can do. And that's what they are, pretty much. 125 ADR, and I'm using 75-25, but 80-20. I've done a test on... So the difference between 80-20 and... actually, did I do a 75? No, I didn't. Right, so the difference between... This is the RSI that I run, 21. So the difference between those two, yeah, is very, very little. If you go and look at a chart and look at the amount of times it hits 70 and then look at the amount of times it hits 80, obviously it's got to get through 75 to get there. The difference between these two is not a lot. So I've just run it on multiples of 10. I haven't done multiple. Again, there's so much I haven't done. I haven't done multiples of 5 yet. On the hourly. So that's the 4 hourly, sorry. The hourly. Yeah, the difference between that and that is very little. So that's what I've used. I've used that one because it's safer, has less trades, less drawdown, and still generates really good profit. Whereas that one, you're getting to more drawdown. The thing that I've got to try and do is release something as a default, because a lot of people are just going to want to use the bog standard default settings. So I have to put something out that is safe for them, because if I go, let's use 60-40, but you've got to do drawdown control manually and you've got to do aggressive drawdown control. Have you watched the bootcamp? No, can't be asked. Just want to put it on the chart, thanks. Those people are going to blow their accounts. So I need to put it on the highest possibility setting, so that the idiots that can't be bothered to put 5 minutes into even watching a video can stick it on all 28 pairs and not blow their account. That's what I want to achieve with the initial default settings, which isn't far away from what I use. So I've decided to go there, and I'm toying with the idea. If you look at the set files for 125, which is ADR 4. Oh, no, I didn't want to press that button. Just added a load of new sheets instead of scrolling. So ADR 4, 1,024 out of 1,024 worked. When you go up higher, it's pretty much the same results. But look at the number of trades taken. Yeah, this is a test over a year, this particular spreadsheet. But this, when you get up to sort of 175 ADR, you're only taking somewhere between 7 to 15 trades a year. When you go down to ADR 150, you're now taking 20, 30, 40, 50, 60 trades a year. ADR 125, not a lot of difference. Yeah, so I decided to go with 125 because its profit curve is better. You got a 5.65 return on drawdown as opposed to 4.29 return on drawdown. So it's actually better to use 125 than 150 from a profitability factor. You're going to get into roughly the same amount of trades because we're saying it's gone. And when it goes to 125, well, it goes to 150. But getting to 175, you suddenly drop the number of trades dramatically. But the profitability stays the same. And what I found on this test is you get into way less trades because it comes back faster because it's more stretched. So the drawdown is a lot lower. But then people are going to run this in a back tester, as they always do, over 3 months and go, it didn't take any trades. Load of crap. This is my problem. I'm thinking from somebody that makes products to help people trade. I've got to think, what are they going to do with it? They're all going to stick it on and just go, I'm just going to use the defaults. So I've got to use something that's kind of in the middle. So I've got lots of testing that I'm still doing, but I think I've found what I'm going to do with it now. So. But anyway, release it with a few different set files. Yeah, but that's the problem, Dougal. I'm only one man. I'm in here. To release set files takes approximately 2 to 3 days for one set file, because that's how long it takes to do a full test across multiple currencies, multiple times, etc., etc. So one set file will take me 2 to 3 days to produce. Robust one. I can give you 31,000 set files right now. I haven't robustness tested those 31,000 files. So yeah, you can have 30,000 files right now. I'll give you the spreadsheets. You can just use whichever one you want. Just go that one, and it'll work over a period of a year on the pound US dollar, because that's all I've tested. That particular spreadsheet. I've got other spreadsheets which I've tested on, but that particular spreadsheet is a year on the pound US dollar. Run it over 4 years and see what happens. I don't know. I don't know if it's robust. So you see what I mean? You can do all of this. I'd much rather put a video out there and teach you how to do robustness testing. Don't do it yourself. It saves me hours. But you see what I mean? This is my problem. It's time. It's me as a person. So if I can get it out there, hopefully the people that know what they're doing will be able to produce some set files that work. And then I can verify those set files and go from there. But how about three sets files to start with? One general one high risk. Yeah, so what I'm looking to do, the set files I want to release are these. So I want a highly aggressive double an account fast set file. Think hedging. Yeah, this account. We're in March. We're in the middle of March, and this is doubled the account since January. I'm $3,000 away from doubling this account. This set file is going to be your double an account fast set file. Hedging. Using 60-40 RSI. Just riding the waves. But we're going to do drawdown control in the squeezes. Yeah? That one. Using small risk and tiny profits regularly. What I do. Box standard. Large risks, high probability setups. 85 RSI extensions on the hourly. 15 RSI extensions on the hourly. 175 ADR hits. Yeah. Super high probability. You won't take more than 2 to 3 trades maximum. You'll only get 3 or 4 trades a year, but they will work. Yeah. It's a different approach. People that want to be super safe. This is my retirement. If I blow this retirement, I die. That's your set file. Large risk, high probability setups. So we're going to get in with 1.5%, 2%, and we're going to get out with 0.5% profit. So the risk reward ratio will be negative, but the strike rate will be 100% within 2 trades. Yeah, those sorts of things. It will do it, but you have to find those set files. You've got to find those settings. Long-term investment style, big drawdown, high return. Yeah, so these are the not using drawdown control set files, using 0.15% risk. We're going to hold positions for 3 or 4 months. These are the ones you'll probably want to go swap positive only on. Those set files, yeah. Low time frame, high time frame, people that want to trade daily, people that want to trade stupid 1-minute charts. Yes, it will make money on 1-minute charts. I've tested M15, M1, and it kills it for a short period of time because you're trading algorithmic chop. When it decides to go off in a squeeze for 3 weeks, you got in at the very bottom, probably on that candle that started the squeeze because you're an idiot trading 1-minute charts. People are out there want to do it. Let them do it. It's fine. And obviously in line with swaps, as we've discussed. At the moment, this is something that obviously is very costly to the business. Swaps, we can't do anything about it. Interest rates are high. Interest rates are swaps. So set file for that. But that will become irrelevant in 18 months because the interest rates will be back down again. So it's kind of why that's on the bottom of the list. But that's what I'm doing. And I have been doing pretty much for 4 days solid, but I haven't even cracked the back of it yet because I'm just getting overwhelmed with positive results. So it's a lovely problem to have, but it's an impossible situation to overcome because I just don't know which one. If I pick one, I'll just go, there's always one that's better, isn't there? This is the problem. Whatever you do, there's always a better. So, and this is why people system hop. Yeah, they go, oh, this is working brilliantly. Then it doesn't work quite so well. And you're like, oh, well, I should have used that one. So I'll use that one. And you just hop around all the time, different systems, because you're on the one that's working best at the time. Nothing is ever going to be consistent because the market changes. So, it's a difficult thing to do. But that's what I'm going to do. So it's going to take me a while to get it sorted. Because I want to trade them as well. I want to trade as much on full auto as I possibly can. But as you know, aggressive drawdown control is always going to be something I'm going to do myself. So have some safe ones and some risky ones. Yeah, exactly. Have I tested the EA on indices? No, I don't position trade indices. So test them. You can test it. I have no idea. I have no idea what it will do on an index. I have no idea. Let's find out. Weird. Data problem there. Oh, I don't know how far the data goes back on this. I've gone back a decade here. I've no idea what the DAX was doing a decade ago. It's position trading. I mean, it works, doesn't it? It just works. I think you'll find that when you start getting into a bull calm market on the indices, you'll probably find you'll get some hell of a hefty drawdown control done. So you'll probably find this equity curve will drop off like a rock because when the market is bull calm, you're going to get squeezed virtually all the time, which is why I don't trade indices with position trading. You know, it's in $5,000 a drawdown. It's in 10% of drawdown, and it's stuck in 10% of drawdown because I would imagine we're in a bull market. Doesn't work. This is why I don't trade indices with position trading. Yeah, indices are manufactured to go in one direction. So you could set it. You could set it in MT4 to go long only. In which case, so the way there's all sorts of things you can do. So for if we don't trade ADR reversals and just trade RSI, if you set the RSI low trigger to 20 and the RSI trigger to 100 on the high, it will never take a short because it won't. I mean, if you did get to RSI 100, fine, I want short on it. But you're never going to get there. So if you set the RSI trigger to 100, obviously it's never going to take a short trade, is it? So if we go long only by setting just, I want to take RSI extensions below 20, what it will do is it will buy the dips. That's all it will do, is it will just keep buying dips. So you'll probably find the equity, it's going to take less trades in a bull calm market because it's not going to dip very much. But you'll probably find the equity curve literally just that. But go back to 2022 when we started the bear volatile market, dead. Got to be able to adapt. There is no set file that is going to work 100% of the time because market volatility and market conditions are going to change. So therefore, this strategy, which works beautifully in a trending market, which is what the indices do 80% of the time, will die in a bear volatile. Yeah, do that. But again, I know all this stuff because I've been doing it for a long time. But you can test all of this stuff. You can learn all this stuff, and you'll know what to do with different markets by observing them. If you look at an index and go to the daily chart and scroll out to the maximum view out on any index on daily, you'll see what they do. That's all they do. You don't want to sell them. But yeah, it's not particularly effective. Look, even just bull only. It's getting squeezed. But if you rerun this, yeah, so where have we got to? February 2016. If you rerun this test without drawdown control, which is what Warren Buffett does, you'll find a very different result. A very pleasing result, I would imagine. And this is exactly what I was doing on my pension fund account up until 2020, well, when the bear market started, basically. Was just literally buying the dips. No stop losses, no drawdown control, just scaling into dips. Exactly what Warren Buffett does. Yeah, every time the market comes down, he just buys it, and he keeps buying it as it's coming down, because as long as businesses are in operation, they're going to produce positive returns. If they produce positive returns, their stock price goes up. So if it's temporarily dropping, it's only temporary, because if it isn't, the board gets fired. The board doesn't get fired because they're stockholders. Therefore, it continues to go up. They're manufactured to do that. So it's very easy to create a set file to ride that wave. There you go. So yeah, it does work on indices. But you need to know how to trade indices to create a set file to trade indices. Yeah. You probably want to use different TP settings on it as well. In fact, you might even want to use a slightly more aggressive RSI, like a 60-40, like a 40. You'll get into more dips. You will get squeezed more, though. So yeah, works fine. But again, I can release all these set files. But, someone's just said, can we help with testing? Yeah, download the demo and go and test. Just come up with some set files, and share them. That's what the group's for, sharing set files. Sharing everything, basically. Market's totally sideways, look. Why are we not getting any signals? Oh, there we go. See, that went sideways for a long time there, didn't it? Very long period of not making any money. Yeah, imagine someone testing this in that period. They'd be like, this doesn't work. The other thing I've got to think of as well, as somebody that puts out products on the MQL5 marketplace, is all the products that are on the marketplace have to go through stringent testing. So everything that I release goes through multiple back tests to test that it will work properly. It's got certain safety features included in it, all sorts of stuff. So I have to set the initial defaults up to a specific way that it will trade on gold, an FX pair, two FX pairs, and it has to trade on the M30 and the hourly timeframes as well. So I have to set it up in such a way that it will take trades on full auto. Otherwise, it won't get through the validation process and it can't go out to market. So there's certain things I have to have in the EA, and it has to do to be able to get it to work, which does restrict me in what I can do with set files as well. Initial default set files, that is. But there you go. So there's the DAX. That was from 2013 to 2019. So that's 6 years. Hasn't made much money though. Look, it's only made 10 grand in 6 years. Not a lot, is it? But think of it like a pension fund. How would you like a return of 20% in 6 years? This is on low, very, very low risk, very low risk. So, you can do better. But yeah, did that just blow? Just blew the account up. $2020, COVID, March. Yeah, COVID hit. Nothing's going to survive COVID. You're buying. You're in a bull market. This EA is set to trade bull market. Yeah. COVID ain't a bull market. Never going to survive it. But restart this test. 2020 in April. Go May. Let's go April. Yeah. Restart the test. You'll be absolutely fine for 2 years. And I can tell you what it's going to do. It's going to run fine for 2 years, and it's going to blow the account again. Because we went into a bear, volatile market. Trade away happily. It's going to make a load of money. It's going to make a very, very good amount of money for a couple of years. Then 2022, it's going to pop. But we know that. We know that this is a bull strategy. Oh, hey, whoever you are. It's probably my broker phoning up. Don't release that. We'll never make any money. He's probably watching. So yeah, you watch it, it'll crash the market in about 6 months' time. But that's, we know these things. We know what to do in bull markets. We know what to do in bear markets. We just don't know when bull and bear markets are going to come. So, it's really interesting that 80-20 is more or less the same as 70-30. From a return perspective, from a number of trades perspective, it's very different. And from a drawdown perspective, it's a little bit different. But from a return on drawdown, it's fairly similar. Where are we? June. There we go. Getting into trouble now. We've gone bear volatile. Or have we not? No, not yet, have we? Or was it 2023? Am I got my years wrong? I can't remember. When did we go bear volatile on? I haven't got the indices there. There. Yeah, so it was January 2022 when we went into the bear volatile market until October 22. So it'd be interesting to see if it survived. It did survive, look. There you go. So it survived that bear volatile market. Interesting. So the only thing it didn't survive was a once-in-a-generation pandemic. That set file. The only thing it couldn't survive was that pandemic. It survived that bear volatile market just buying it. I'm not letting you have that. Mine. I shall use that. Needs to be tested on all indices, though. Oh, we're still going. Hang on. We haven't finished yet. Well, we're still going, but we're back in a bull market now, so we'll be fine. But again, not producing huge profits. Okay, so that's test over, I think. Yeah, so you went into $8,000 a drawdown on a 50k account. You produced $6,500, 1-to-1, pretty much same as an investment portfolio will run at 1-to-1 risk reward. It's what the market, that's what everybody does in indices. So it will work fine. And you can fine tune it, test it, system parameter permutation, test it. But like I'm doing, yeah, with all my testing, you have to be aware of what's going on in the market. So my initial testing is 1 year to establish something that has got potential to work. Then run a 4-year test post COVID. Yeah, so starting in April after the COVID crash. So we want to test, has it worked well in modern market conditions since the pandemic where everything's been screwed up? Is it working? Yes. Brilliant. Now let's test a stable market which ran from 2016 to 2020 before COVID. Yeah, COVID, we know you're not going to survive COVID. You're dead. You hedge it, you close it, or you die. That's it. We know it's a pandemic. We've never had one before. Everybody went pop. Not everyone went pop, but everyone got hurt. So we test it outside of that COVID criteria and then do a final test. So we're testing before COVID. Did it work for 6-8 years? Yes. Test it after COVID. Did it work for the last 4 years? Yes. Brilliant. Right. Let's run a test over the whole thing. And like that test, probably go pop. That's confirmed my suspicions that nothing you can do, is there? Yeah. If the world explodes, you die. Simple as that. You can't survive it. So if you're trading, that is. And if you're the wrong side of it, don't forget, before COVID, we had a rally. As mean reversion traders, what would we have been doing? Selling. So, you might have survived it, but you would have been buying it on the way down, probably, because you would have been extended within 24 hours. Yeah. So, it's just one of those things. But yeah, people can test, obviously, and do their own testing and play around with it. Why don't you have a section on Discord where we can all contribute to our own tested set files? There is. Well, just anywhere. Put it in the product support area for that product, whatever product it is. Gav, for your information, POS is also a piece of shit in modern slang. Yeah, I know. But it's also position, short for position. I don't mind if people want to call it the piece of shit EA. Good publicity. Look at that piece of shit EA that just continuously makes money. Oh well, I don't care. I'm not trying to sell 100,000 EAs. If people want to mark it as POS, meaning that's fine. I don't care. Just go to the correct section and post your file. Yeah. Somebody's doing that at the moment for the for ORB, I think. Somebody's posting some set files for ORB, which is fine. Just post whatever you want. Is it released? No, will be possibly today. I've just discovered a problem with it. Not with the automated functionality, but with the buttons. I've realized with the buttons, with the trailing stop functionality. Oh, wrong one. Cancel. With the trailing stop functionality, I had set it up so that it only worked when trading only was set to false. So it's placed that pending order there. What it will do is it will jump the pending order up, but only if the button was set to false. Button trading only was set to false, and of course, that's when you're using the buttons is when you've got it set to true. So I've had to reprogram the EA this morning. It's only going to affect the functionality of trailing stop. But I coded in it away because it's how I was going to use it. But people aren't going to use it that way. They're going to use it in a different way, and I know it's going to go wrong, basically. So I've had to recode it and rechange the manual this morning. So if this pushes up, that will auto trail. But I've had to set it so that it does it regardless, because what my thoughts were was I wanted it on this template here when I'm using it, and I want to be able to press the buttons. But on the VPS will be set to M5 or M15, and it will take over the trailing for me. So I've had to set it up so that it does it on both, but hopefully it'll work. I mean, things are going to be needed to be tweaked, I think. There you go. So that has jumped up to there because price is pushing up. So if that does that, we'll just keep going with price until the sellers kick in. Then we'll get in. The broker can switch to a Lambo dealership. Yep, they probably can. They got enough money. Have I decided on a price? Same as everything else. It will just be the same as everything else. But yeah, so I'm going to try and get it out if I can today. But yeah, it's all kind of ready to go. I just need to do some final testing and stuff on it. So so far today, nothing's moving much at all. So we're just sitting waiting. Hopefully we're not waiting for the news tomorrow, but we might be. Why have I got a buy and a sell on there? Oh yeah. It's a weird trade. Why have I got a buy on up there? That's that weird ADR bug, isn't it? Every now and again, you get a candlestick that does over an ADR, and it makes a new high and a new low, and the EA gets confused, and it takes a long and a short at the same time. Or it takes a long when it shouldn't, and it takes a short when it shouldn't, because it's an abnormal instance of price action. So that's one of those. I think I might just close those longs out and get out of those longs. I don't want to be long. I'm just going to put a break even on the stop on the sell just in case as well, because I don't know which way that's going to go, and I don't really want to be in a hedge on it. Shouldn't be hedged on this account, really. I would suggest the initial set files be the ones you've been using successfully. Yeah, they are. So it's pretty much what I've been doing. It doesn't matter whether you use 70, 75, 80, 68. You know, they all work. It's an RSI extension, ADR extension. It doesn't matter which one you use. As that spreadsheet I've just shown you is, you know, this is testament to the strategy. Yeah, all of these RSIs are different. There's an 80-20, 14, 21, 28, 90, 10, 14, 21, 28. 70-30, 14, 21, 28, 60-40, 14, 21, 28. These are the results of those tests. They're all profitable, all of them. Doesn't matter what you used. It's what you do after you get in. And that is spacing, drawdown control, and aggressive drawdown control if required. And the EA does all of that. So it doesn't matter what I set the initial settings at. They will all work. But the level of drawdown will be different based on, you know, if you get your 60-40, you're going to get more drawdown than 80-20. So I'd rather go with the 80-20 to give people more comfortable start. And then they can test and reduce if you want to. Yeah. And I'm going to start with very low risk, very low reward. And if you want to get more aggressive, up your risk, up your reward. Yeah. So that's what I've decided on. Just for safety's sake. Yeah. Right, that's all I've got for today. I'm back tomorrow. There's nothing happening today, so there's no live room this afternoon because there's nothing going on. Market may move off of something if something happens, but we just got to monitor the news. Kashida's talking again. Should be asleep. So there's nothing going on today, basically news-wise. So I'm not expecting the market to do an awful lot. Made a lot of money yesterday, and today it's a case of just waiting for something, hopefully, to move enough to get some bank. But other than that, it's all about tomorrow's PPI figures. So tomorrow I will be on at the same time at 12:15, well, same time as yesterday. So it's 12:15 for the PPI figures. And we'll have a look at how that affects the market if we get any movement. So it's PPI, it's retail, and it's unemployment all at the same time at 12:30. So we'll be trading that. And then obviously we'll see what happens tomorrow. But there's not an awful lot on Friday. It's University of Michigan, basically, which is hit and miss. So I think we may have had the volatility for this week yesterday. And as you can see, the week so far is utterly flat and terrible. We're just not doing anything. Nothing's really going anywhere. Apart from the moves that we've been waiting to undo, which have kind of half-heartedly started. But, you know, I'm getting out super fast. Because if you actually look at this, like this, for example, you know, 1, 2, 3, 4, 5, 6, 7, 8. We haven't gone anywhere in 8 days. It's 2 weeks now. So you just get out as fast as you can when you can, because there's no point in trying to go for propulsion gaps at the moment because it's just not got any propulsion. There's no volatility. So there's no point in really talking about anything until this thing starts to liven up a bit. So I will be back tomorrow afternoon at 12:15, and I'll be in Telegram and Discord, obviously, if you need anything else. I will get this all done at some point today. Yeah, and we'll go from there. So if you need anything, let me know. Other than that, I'll be back tomorrow, 12:15, and I will see you guys then. So have a good day.